The Fed minutes are due later today and will be watched closely for any new insights into the central bank's monetary policy outlook. 2018 is likely to be an interesting year on many levels, not the least of which being the market's response to ongoing monetary policy normalization. Of course, the reshuffling of Fed personnel will also be watched closely, with the market waiting to see exactly what things look like with Jerome Powell at the helm. Fisher is gone, Yellen will be gone, and more new members will be joining. And so there will be this added layer of uncertainty trying to figure out how all of that impacts policy. The market has responded favorably to Powell's appointment given his dovish-leaning tendencies, though we wonder how much flexibility he will have to exercise those tendencies, with the economics of it all not leaving much choice but to be pushing higher on rates. Ironically, the more dovish one is, the more you could argue for a willingness to get rates up as soon as possible so that there's room to accommodate if and when things get rocky. There's also this issue of inflation and what that will look like in 2018. The Fed has been looking for inflation to turn up, but has been scratching its head trying to figure out why it hasn't done so already. If inflation remains subdued, it will lend itself to a very slow and drawn-out normalization that ultimately is favorable for the stock market and less so for the US dollar. If, on the other hand, inflation does all of a sudden shoot up out of nowhere, as it can, this will be something that could pose serious risk to the global markets as it forces Powell into a more hawkish position that he will not want to be in, which will accelerate the normalization process, weigh on stocks, and potentially inspire demand for the buck on the yield differential implication and on that safe haven flow. As we head into the minutes, there's little more buzz after the outgoing Fed chair commented on inflation and the Fed's doubts as to whether subdued inflation is really transitory. This has hurt the US dollar a little on Wednesday, though none of this should do anything to change the outlook for December, which is widely expected to produce another rate hike. Overall, today's minutes aren't expected to make any big waves, though we would welcome any comments that express concern over financial stability risk and the elevated stock market. As a final note, the minutes are out at a time when many in the US will have already jumped off the desks or will be doing so for the Thanksgiving long holiday weekend, which means trading conditions will be thinner, something to keep in mind.